Good Friday morning, everyone. We're on the floor of the New York Stock Exchange with Jim Cramer. Jim, how are you feeling about the markets heading into the G7 this weekend?
Well, look, I think that one of the things we've learned about trade is the fluidity of it. You could put on those tariffs on steel and aluminum, and then the market keeps humming, even though there's some parts of it that did get hurt in terms of the costs. I think that the spat with Mexico is very crucial, because if NAFTA has ended, if they just stops NAFTA, then you're going to see a big hit. Big hit to the market, and then it might come back, but Mexico is very, very important, integral to our economy. And I'm not a globalist. I've never been. Really questioned NAFTA from the beginning, in the same way I questioned Europe. But that's political. As far as the earnings per share, there are some companies that be hurt, but most won't, and that's why the market has not reacted the way people think.
Jim, we were not on the air yesterday because of your corporate governance conference. Yes. Congrats on an incredible day.
Thank you.
You spoke to Nelson Peltz about tariffs.
Yeah, I mean, Nelson's very close to the president. By the way, it was pretty clear. I thought that Nelson is the reason why the president's been picking on Amazon. That Nelson, point blank, who speaks to the president constantly, he just said, look, it's unfair. The USPS in the last mile is spending too much to be able to bring the Amazon. So now we know the secret. But I know that Nelson was saying that not that that Procter's going to break up, but that Procter may go the way that he wants it, which is to do these business units that actually have accountability, and that's not been the case. I felt better about Procter after speaking to him, because that would make the stock do better, and the stock is doing better, but please, don't buy it on the sum of the parts. I don't suspect or see that in the cards.
You also spoke with Ron Shaich. He was fired up.
Yeah, Ron basically said, listen, I got tired of the public market, so I sold. He was impassioned, and it's interesting, as he said, remember, I got tired of the public markets, and I was the #1 performer in the group. So it was a sobering analysis, and basically just said, it's time to really start thinking about the short-termism. Remarkable presentation, fabulous. And
as you wrote in Real Money this morning, maybe we should abandon guidance given the rise of index funds.
Pain in the butt, and the index funds, I had newfound affection for the index funds and what they're trying to do, because they didn't see their own popularity coming, they didn't see their own power coming, and they're trying to come into their own and figure out what the right thing to do is. I'm very confident that they will do the right thing, which is to be thoughtful when someone who's a challenger goes in after a company that is not doing well, that maybe they go with the challenger. But if there's a company that is doing really well and they're challenged, maybe they should back the incumbent. So there was a lot of thought about that, and I really liked it.
Yeah, go to realmoney.com, read the column, because it's all about the lazy investor, as you say.
Yes, it is.
Jim, Broadcom beat earnings. The stock is down a little bit.
Look, Broadcom, when you have a source's story about Apple saying that Apple's cutting back its semiconductor orders, you got to let that reverberate through. Some of that would be Broadcom, obviously, because Broadcom even talked about Apple. But I don't necessarily want to say take action on any of those stories. Why? Because I find that it's really been, they're often incorrect. But no one ever comes out after they're incorrect and says sorry.
True. And you spoke to Steve Mollenkopf yesterday.
Yes.
And he basically attributed President Trump blocking the Broadcom deal perhaps to 5G.
Yeah, that 5G is so important, which is also, I have Tim Armstrong tonight, talking about Oath and talking about Lowell McAdams staying on as executive chairman to push through 5G and how important it is, and David Faber talking about no latency and how 5G is going to make it so your cell phone is basically just an empty pipe, which would hurt Apple, by the way. So we have to think longer term about 5G and Apple. Apple stays ecosystem. That's the theory about why Apple's going to be relevant, because 5G is going to change things.
And Mollenkopf told you that some technologies are so important that countries want to weigh in on them, and that's what we saw.
Right.
All right, Jim, we'll be watching your interview with Tim Armstrong tonight on Mad Money, and we'll continue talking about stocks on ActionAlertsPlus.com.